Hi. In this video we'll be exploring the essential concepts of support and resistance in chart analysis. As a trader, understanding these key levels can significantly enhance your market predictions and help you make informed trading decisions. So, let's dive right in and unlock the secrets of support and resistance in the world of chartism. Support and resistance basics. Support and resistance are fundamental concepts in technical analysis. These concepts represent price levels where buying or selling pressure is likely to prevent the price from moving further. These levels act as psychological barriers for market participants, and they can play a crucial role in your trading strategy. Support is a price level where buying pressure is strong enough to overcome selling pressure, thus preventing the price from falling further. It's the floor that the market tends to bounce off. Resistance, on the other hand, is a price level where selling pressure is strong enough to surpass buying pressure. A resistance stops the price from rising further. Think of resistance as the ceiling that the market struggles to break through. Identifying support and resistance levels. To identify support and resistance levels on a chart, just do one thing. Look for areas where the price has consistently reversed or struggled to break through. These levels can be horizontal, diagonal, or even follow trend lines. The more times a price touches a level without breaking through, the stronger that support or resistance becomes. Furthermore, it's essential to note that support and resistance levels are not exact price points. They are rather price zones where a reversal or pause in price movement may occur. When a support or resistance level is broken, it can sometimes reverse roles. Former support can become resistance and vice versa. Trading strategies with support and resistance. Support and resistance levels can be used in various trading strategies. For instance, you can use them to 1. Enter a long position when the price bounces off a support level, anticipating an upward move. 2. Enter a short position when the price is rejected at a resistance level, expecting a downward move. 3. Place stop-loss orders below support or above resistance to protect your trades. 4. Set profit targets near support or resistance levels where price reversals are more likely. 5. Use support or resistance as a breakout level. Remember to combine support and resistance analysis with other technical indicators and tools to validate your trading decisions and enhance your overall strategy. And there you have it. An introduction to support and resistance in chart analysis. By understanding these crucial price levels, you'll be better equipped to navigate the markets and make more informed trading decisions. Thanks for watching, and don't forget to like, comment, and subscribe for more insightful trading content. Happy trading!